So with this plan, you'll see the benefits aligning perfectly with your retirement goals, guys.
That sounds very reassuring.
Welcome, everyone. I'm excited to share how you can transform your financial future by, quite literally, becoming the bank. So the real challenge here is not just about identifying the problem, but about how we collectively respond to it. The affordability index is the lowest it's been in decades. So essentially a perfect storm. The future is bright, and it's something we build together.
So we're back live today. Have a performing note in the portfolio with Silvercrest Opportunity Fund and mobile mailbox money. Win Mobile Homes here in Arizona. We have a tremendous amount of transactions going on right now. I got a note available at 96.5, paying $1,200 a month for a 3-year term. This note that we're talking about today is actually performing in my portfolio with Silvercrest Opportunity Fund, yielding me 14%. And my accredited investors participate in 27 positions as a per unit owner share, accredited, earning 10% return for a 1-year term paid monthly, 12% for a 3-year term paid quarterly, in an income-oriented investment strategy, investing like Warren Buffett in housing, necessity housing here in the Valley. Just wanted to go over a case study of one of the 27 positions we currently have working in the portfolio and how you could potentially participate and why this is a safe place given the financial market. This is a manufactured home in Moon Valley manufactured home community, mobile home park here in the Phoenix market. We acquired this note after buying, rehabbing, and reselling this home on seller financing through Win Mobile Homes. So Win Mobile Homes got the buyer borrower underwritten, Dodd-Frank compliant through a third-party underwriter, and consummated the transaction. And Silvercrest bought the note in a bow of capital investment with quality collateral in a desirable area here in the Arizona market. Just wanted to kind of address this specifically, that a lot of people here in manufactured housing and immediately think it isn't that unstable. And I get it. That perception exists. But here's the reality. What's actually unstable right now is rising interest rates, volatile stock markets, and over-leveraged residential buyers. This is what we're in, is necessity-based housing outside of potential tweets going off about the war or market fluctuations in Bitcoin or low yield return on investment in adjacent real estate investment strategies. This is a borrower in place, payments are being made, and it's backed by a real housing asset, a quality home, quality collateral, underwritten buyer borrower. So think about stability correctly at the end of the day. This isn't luxury housing. These are people who need an affordable place to live, are priced out of traditional ownership, and are making payments often at or below market rent. So they own this home for what they would pay in market rent here in the Valley. That creates a very different behavior. They don't leave, they don't speculate, they stay and pay. Our default rate is about 2%. So given my expertise and niche market in manufactured housing, that's a great hedge out in the market with Silvercrest Opportunity Fund. Not from the structure of the home is how we make the money, but from the demand for housing. So altogether, what you have is a borrower with skin in the game, a first lien position, a fixed payment stream, and demand-driven necessity. That's not unstable, that's predictable. So when people say manufactured housing feels risky, what they're really missing is this isn't about the home. It's about the paper created on top of it. And that paper is producing over $1,100 a month in my portfolio on a structured long-term basis. That's stability, that's income, and that's why this model works. When I buy this note in my portfolio and continue performing, I get the collateral file. I'm not buying the home, I'm buying the loan on that asset in a performing pro forma nature. So I get the final photos, the insurance and taxes are paid. We have our lien position in senior debt with photos, title pictures, and all of the contracts ultimately associated with the sale of that home. So clean chain of title in the Phoenix market. So to find an asset at $90,000 that pays you passive cash flow at $1,100 a month is literally non-existent in this market. You can't find cash flow like this in any other adjacent real estate investment strategy. This is Moon Valley Mobile Home Park that we have had in the portfolio since October of last year. So as you, the investor, you step in the right place at the right time with capital and position yourself on top of the capital stack in my portfolio. And I manage those notes. We have about 27 currently performing, but at no cost to the investor. If anything does end up going non-performing, the fund reperforms the asset. We haven't had to do that, but if you do enough transactions, it's bound to happen at the end of the day. So that's just a quick look at what a $88,000 note looks like in my portfolio, 1 of 27, yielding me $11.05 a month in the bank's position. We don't have to worry about appreciation. We don't have to worry about the hardships in operating a long-term real estate investment strategy like long-term rentals or Airbnb. This is literally buying an asset that produces income at the end of the day, a collateralized lending opportunity. And that's just a little synopsis of what we do on a day-to-day basis.
So with this plan, you'll see the benefits.
Opportunity Fund.
Let me ask you something. How much of your time is actually yours? Not what you earn, not what you own, your time. Because a lot of people think they're investing, but what they really did was buy themselves another job. Maintenance calls, insurance going up, taxes changing, things breaking, tenants leaving, problems stacking. And now your investment needs your time every single month. But there's another way to think about this. Every month, a payment shows up. No calls, no management, no second job. Just a structured promise that was agreed to in advance. A note. A borrower lives in the home. The home secures the debt. The payment is defined. Month by month, that payment comes in. Not because you fixed something, not because you chased something, because it was structured that way from the beginning. And that's what people miss. This isn't about chasing returns. It's about buying back your time. It's about stepping out of the day-to-day and into position where your capital works and you don't have to. Affordable housing still gets solved. Families still get homes. And you get your time back. You're already investing something. The question is, are you investing your money or your time? That's the shift.
Buy your time back today with Silvercrest Opportunity Fund and start earning interest in as little as a 30-day program. Y'all